Hey, it's Sully, and this is episode 538 of the Orange Pill Investor. We got a short trading day today, so it is time to get busy. I got all that shit worked out with the damn platform not letting me trade yesterday. Yeah, since I had to bust out the old computer, it was detecting a new login, so it shut my trading down due to suspicious activity. So I had to go to the email, click the link, do all the things, jump through the hurdles. Apparently, the new hurdle rate is trying to make sure that you don't get scammed. So let's make this happen. I think I got 16 minutes before the market closes, if it's noon. So, what's up, Buffalo? Merry Christmas, Kevin. What's up, Howard? Merry Christmas to you and your family. Happy New Year. Same to you as well. Hopefully, we'll get some get some 2026 changing trends. No coal in the stocking. Hopefully. All right, so this is the main account, and I'm just going to continue on. I don't think. Oh, you know what? Let me see if the new expirations are out. They are. So, February 6th came out. February 13th did not. So let me just see what would happen if I try to roll here. Like, the liquidity is not here yet. But I should probably still be able to get some fills here. Well, let's just see if I can or not. So I'm just going to try to get filled at the mid price, which is kind of weird. Or what are my other options? I got to go all the way out to 58 days. For some reason, the 14.5 strike has more liquidity. So I could go here. There's at least some bids and asks. Usually the $half strikes have the least liquidity. People like the round numbers, like 15 is a nice whole number. But there's no bids here. But at least the bid ask spread is 15 cents. So maybe I'll just take this one and give that a shot. Let's see, what are the other options? Yeah, let's try that. I'm just going to try to get the mid price filled here. And this is the weirdness with these cash secured puts. I don't know if this is unique to Tasty, but they are like not even counting the buying power against me. I'm getting, well, we'll see if I get the credit or not if this fills, but it's not even going to decrease my buying power. Well, I guess kind of makes sense because I'm already selling the 15s, so I'm obligating less money by trying to get a fill here. So that just filled immediately. That's interesting. Tempted to add 10 more. Let's just see what would happen if I did. Yeah, so in this case, I would just be adding positions. So it still would be a pretty decent sized credit for a very modest buying power reduction. If I look at Tesla, it's like a 10 to 1 relationship. If I got paid, I don't know, $500, I would reduce my buying power by like $5,000. Let's just take a look at what that looks like. If I do the 450 strike, yeah, I'm getting kind of a similar credit to what I was getting on Cypher, but with Cypher I was only having to put up like 20% of this buying power. All right, so I like that. I've rolled this back out to approximately 45 days, added a little bit of a credit in there, nothing earth-shattering. This can just hang around and we'll wait. You know, there's a nice little chunk of extrinsic value left in here. We'll be closed tomorrow. I'll wake up on Friday Either this will pump or it'll be where it is, and this I'll be able to buy this back for nothing and roll it out. Strategy, I had rolled these down after I got my account straightened out yesterday, and we'll see what happens. These will either be worth nothing on Friday or maybe I'll get wrecked, which would be nice. Started stacking the 1080s. I've still got this Poorman's covered call that got absolutely destroyed. I can see what happens with it for the next 50 days. And then once this is 90 days to expiration, I will roll it or just close it out and move on. Same situation here. I noticed that these cash secured puts in MSTR were pretty efficient as well. So I could roll this out, I could get a credit, and this is actually going to increase my buying power. I'm a little bit nervous about rolling these so close to at the money though. So I wouldn't mind rolling this down, but I can't roll it down very far even for a credit. What happens if I do that? Yeah, that gives me a little bit of breathing room. It's not much, just $5. But it's going to give me a credit and increase my buying power. So let's just see what happens. Let's see, I'm in margin 51,329. Okay, they don't want to pay me. I always say I'm going to do this fast, and then I fucking run my mouth. Yeah, see, this expiration date is not terribly liquid either. Actually, $1.15 bid-ask spread is not the worst I've ever seen. But they are being very stingy. There we go. Finally got a fill here. What did I say it was? 51? Yeah, this was 51 something. So that chipped away at my margin use a little bit. And I think I have one more. Where is it? Yeah, this cash secured put's got 23 days left on it. I'm basically breaking even here. So let's see if I try to roll this out. I can just barely get this out of the money for a teeny tiny credit. Whether that holds or not, I don't know. That would give me tiny credit with a slight increase in buying power. What happens if I just close it? What's that going to do to me? So it would only debit by 1,100, and it would increase my buying power by 1,500. So that's kind of silly. Maybe I'll hold on to it. Well, under 23 days, it really doesn't make sense to keep holding on to this. Except that there is still a good chunk of extrinsic. Let me just take a look at it again. If I roll it down to the same strikes as the other ones, it's a slight debit, which I don't like. I think I'm stuck hodling that one. And then I've got this Poorman's cover call that I just put on 2 months ago, and it's basically got plenty of time left to hopefully recover some of this disastrous value. All right, the IRA, cash account, no margin. Don't have to worry about using margin. These might end up getting called away. That would be just fine by me. Or maybe I'll let one get called away and roll the other. Tesla covered call getting wrecked, but I can chill. This one. So Cypher, I sold the 16.5. We're sitting comfortably here. 15 cents. I mean, technically I could roll this, but 15 cents prorated out would be what? Maybe like 45 cents for the week, which is not terrible. So we'll just wait and see what happens on Friday. Strategy is, not necessarily crashing, but it's still kind of trying to find a bottom. But I've got some time left here that I can roll. Any buying power in this account? Probably not. Yeah. I generally do a pretty good job of keeping no dry powder in this account, and that's by design. Yeah, everything else looks good. This account, I made a deposit from my personal spending, and I think the only thing I did was just buy some SATA because I'm waiting for these positions to be in a position where I can roll them. If I try to roll to the new expiration date, can I even get, yeah, I can't even get out of the money without paying a debit. So I'm just gonna sit on these for a good bit. There's $1.10 worth of intrinsic value here, which leaves $1 of extrinsic over the next 23 days. So there's still some meaningful premium here that I can sit on. And then this one hasn't been on long enough to worry about. I think SATA pays on the 2nd. Oh, 1st or 2nd or something's the ex-dividend date. But I'm tempted to sell before the dividend gets paid out. I know that sounds dumb to throw away the 1% dividend. But if this continues to pump, like maybe I'll sell it and get ahead of the selling that may happen after the dividend gets paid out. If I get a paid 1% dividend and then the price of the stock drops 2-3%, it doesn't do me any good to hold for the dividend and then the price drops. Not necessarily saying that would happen or not, but it's not a foregone conclusion that I should wait for ex-dividend, get the dividend, and then sell, which is, basically what everyone else might be doing. Tesla, a little bit of extrinsic value left here. Wait for Friday. Oh, I switched. Yeah, no buying power here either because I've got all my dry powder plowed into SATA. So the 170s, there's like almost nothing left here. So I think I probably do need to roll this down closer to the expected move. Collect a little bit of, let me make sure I'm not getting screwed on this. Yes, this is playing with fire. I'm selling near at the money covered calls. Not ready to roll. Cypher. I sold the 18s. These damn things are $2.10 in the money. There's 70 cents worth of extrinsic here. What's it do if I close this? Not much. Yeah, maybe I'll just wait another week and then I'll roll all of these at once to the same expiration date. And maybe the 45 DTE date will have more liquidity by then. And don't think there'll be anything I need to do in the 5K account. This is expiring Friday. Do I just have one thing expiring Friday? Yep, Cypher. 4 shares of SATA, that's my dry powder. I do, let's see, I have these two that I copy trade with my brother-in-law. These are going against us, I think. So again, over the last several months, by selling these out of the money cash secured puts, like we haven't been assigned even once. We've just kicked the can down the road, and at some point the price has gone back, over that 45-day period. The price has gone up high enough that we can just roll out for a credit. The main problem in this one is he doesn't have a lot of money in that account. So, like if Cypher was to pump to 25 a share, he wouldn't be able to afford to roll up to the 22 strike or something of that nature. So then it would be like, okay, what else is cheap enough? Is Wolf still cheap enough that I can roll? And at some point, you do run the risk of getting priced out of a stock. And if you can't find something else that's cheap enough, then you're just kind of, I don't know, stuck looking. But there should be another several mining stocks that are like $5. And if everything pumps to $50 a share, the $5 stocks will pump to 10 or 15. So should always be something that you can find. Looks like we are at 12. So maybe the market is the market closed? Isn't it? I didn't hear anything ding. Or did they close at 1? But anyway, there's nothing to do here. I'm just staring at this for no reason, really. So we'll check the chats and call it a day. NYC says, GM, we need $500 plus next year or we are cooked. Yeah, I don't, well, it's funny because I don't see any reason why we shouldn't be at 800 or 1,000 next year. But if Bitcoin tanks, obviously that's not going to happen. But of course, I thought we would be at 800 or 1,000 this year. So if you can be wrong over a 1 year period, you can certainly be wrong over a 2 year period. But eventually the math kind of has to catch up, I think. Maybe the market is waiting to see whether strategy weathers this storm with the preferreds. Like they did it with the convertible bonds, so there was some confidence in what strategy was doing, and now they're like, we're not doing that anymore. So they convinced the market that the convertible bond buying Bitcoin thing worked, and then they're like, psych your mind, make your booty shine, we got something better, we're doing preferreds now. And so now the market kind of has to figure out, is it really better, or is this gonna fail? Are you gonna fall flat on your face? Are you gonna go bankrupt? Are you gonna have to sell the Bitcoin? Are you gonna do this? Are you gonna do that? Are you gonna finally get a decent rating from the ratings agencies? Are you gonna get kicked out of this ETF? Are you gonna get kicked out of that ETF? Are you gonna get blackballed from the S&P 500? Is Bitcoin bull season over? There's a lot of questions, and over a long enough time horizon, none of this matters. But for now, it's pain and suffering. Buffalo says, stretch ex-dividend on the 15th, pays on the 1st. Oh, SATA is opposite. So that means SATA's ex-dividend is on the 1st, pays on the 15th. So if I want my div, I got to hold it for another week. And I think my cost basis is like 91. Yeah, 91. So I could take my $3 if I want to sell anytime in the next week. Like if I, if I want to use my dry powder, I will at least have made $3 a share on my measly 4 shares here. Previously, before these products, I was buying maybe even fractional shares in like Strategy or whatever, and then kind of using that as my dry powder. But I'm kind of enjoying playing with this, right? If I get done selling all my premium and I got $300, I'm like, all right, 3 shares of Stretch, 3 shares of SATA, whichever one seems to be the most undervalued. If you're willing to take a risk on, holy shit, it's up to 98. Holy shit. Oh, that's Stretch. Damn it. Yeah, so they might be ready to start ATMing again if they can hit 100. So that'll be kind of nice. But yeah, so if you don't mind taking a risk on SATA, you can get the price appreciation from whatever it is, 94 up to 100 if they can pump it to par. If you believe that they can, you can kind of get that free 5%. Or if you want to take the less risky bet, you're only going to be able to get the appreciation from 99 to 100 because damn straight Strategy is going to absolutely hammer the ATM if this gets to par again. There's like, I can't even imagine. Like, it probably would not even get to like 101 cent. Just like fucking infinite sell, infinite ask at 100.01. I don't know. I could be exaggerating. Maybe they'll let it pump to 101 at some point, but I don't think it ever has, right? Even when it pumped, yeah, look at that shit. They did, that shit did not get over 101 penny. Maybe they'll let it go a little higher just to give it a little bit of breathing room so they can hammer it. Because it looks like you said the ex-dividend was on the 15th. Yeah, so last month it did get to par. They probably were patting themselves on the back. They hit the ATM. And then as soon as they paid the dividend, the shit crashed to 92. But what was Bitcoin doing on November 14th to the 20th? November. So Bitcoin was also crashing. So we've got mixed signals here. I don't really know if Stretch crashed because people got paid the dividend and they were like, fuck it, I got my dividend. Now I'm out. I'm selling. And I'm going to, it's kind of what the point is. If you're going to have dry powder, you're not going to keep it in cash. And if you want to buy the dip in Bitcoin, right, it's dropping from 105 to 95. Bam, Stretch pays its dividend. November 15th, you're looking at a 10K dip. Or actually, a 20K dip from all-time highs. Clearly, you want to add to your Bitcoin stack. Well, what are you going to do? I just got paid my Stretch dividend, so fuck it. I sell all my Stretch, and I buy the Bitcoin dip. There's probably a healthy amount of investors or traders that are using SATA and Stretch as their dry powder, waiting for the dividend, and then if Bitcoin is down, fuck it. I sell all my dry powder and buy the dip. So I don't know if it's one or both, and that's why Stretch tanked. But eventually, I think this will start to smooth out after they pay the several dividends. Maybe the next dividend tanks it from 100 to 95 or 96 if Bitcoin is still on a dip. But it'll be interesting to see what happens when Bitcoin is rallying, because you wouldn't want to necessarily sell your dry powder to buy the rally, but also people FOMO. So this could happen when Bitcoin is up or down. I don't really know. It's going to take some time. to see what the interaction is going to be between Bitcoiners that are also stashing some dry powder in these preferreds. And are they waiting for the dividends to get paid off? And then they're like, all right, this was fun. Now I'm going to jump back into Bitcoin, or, set up a drip and just reinvest the dividends in the preferred itself. This is going to be fun to watch. I hope it's fun to watch. All right. Appreciate everybody for tuning in. Merry Christmas. And be good, y'all.